Welcome to the Money Tree Real Estate Investor Podcast, where we learn from real estate professionals across the industry. They will share about how they got into real estate, the big wins they have celebrated, the mistakes they have made along the way, and the advice they have for anyone following in their footsteps. Money really does grow on trees. Hey everybody, it's William Holland here for another episode of the Money Tree Real Estate Investor Podcast. I've got an awesome guest today, Dave Zook. He's been very successful in real estate, and we're super grateful just to have him today. Dave, thanks for being on.
William, thanks for having me. I'm looking forward to it.
Yes, sir. So I know you're up in the Northeast Pennsylvania area. What do you like to do up there?
You know, I love pretty much doing anything outdoors. I love getting out there in my bare feet, and I like flying. I like hunting. I like biking. I love being in the outdoors.
Same. Yeah, I got to go to Pennsylvania a couple different times and ended up hiking at a state park up there. I think it's called Salt Creek State Park.
Oh yeah, I've
I
heard of it.
had several beautiful waterfalls. So we definitely have that in common. I love cycling and hiking, and just being outside is pretty cool.
Yeah, I like exploring. I just getting out in nature and exploring and hiking, biking, all that stuff. All of the above. Just get me outdoors.
Yes, sir. Yeah, I enjoy the business, and I think it's great. We talked about our faith in Jesus before. It's a great opportunity to have a ministry as well, but I certainly would rather be outside.
Yeah, well, when you can do all three, live out your faith in business, outdoors, and being with other people, impacting other people. That's about as good as you can get it, right?
Yes, sir. Yeah, that'd be the dream. So I'd love to hear a little bit more. How much money have you raised at this point in your career?
Um, it's right about 900 million.
How long have you been working on that goal?
It's about 8 years, right around 8 years.
That's awesome. What are some of the skills and the things that you've implemented that have made you very successful in raising money?
For the most part, I mean, serving the customer, building trust, delivering, delivering the goods. When you set out and put out a performer or projection, um, anybody can put it on paper. It's what happened to the street level, and being able to then turn around and deliver on what you projected. That's where the rubber meets the road. And so, have we hit all of our performers? No. There's a few times where we've raised, not often, but a few times where we've raised for development. For some reason, in my experience, development always takes longer and costs more than what you thought when you started out. And so we haven't done a lot of development projects, but have we met all of our projections? No. But when things happen and you're able to communicate and you're able to tell the story about, hey, this is what we set out to do, and this is how life responded, or how the business community responded, whatever, how circumstances have played out. And as you know, and as probably everybody in this show knows, in the business world, not everything goes exactly how you would like some days. And so, not everything has gone as we projected or hoped, but when you can communicate and people know that you're out there in the trenches doing the best you can, and fighting for them, and you're working for a common goal, that's how you get momentum. This is a relationship business, and without trust and relationship, you don't get very far in this business.
Yeah, I completely agree. And you talked about relationships. It's so important to have that communication with people. And like you said, not everything is going to go as planned. And we know that nothing is going to go as planned oftentimes, but it's just being able to understand, what steps can be taken, and how quickly can you communicate that to the investors, and just make sure that you're aligned with them, and be able to take care of them.
Yeah, 100%.
So I know you had several business interests before you got into real estate. What were some of the businesses that you started, and why did you decide to start branching out into real estate as well?
Yeah, so I was born into the modular building industry. My dad bought a manufacturing business when I was the year I was born, and so I grew up in that business, and I'm still involved in a couple of them. And so I was, on the street in my early teens, doing business, and heavily involved in our family businesses. And then, in my late teens, early 20s, I started kind of branching out and doing some of my own things. And I started a couple businesses. Some of the businesses had to do with the modular building industry, and started doing really well with a couple of those businesses. It's so much so that I got myself into a real tax situation. I started having to pay $500,000 a year in tax, and I had decided early on in my teen years already that I wasn't going to be a real estate investor. I watched my dad self-manage some single-family homes, and I decided that was not gonna be what I wanted. That was not what I wanted to do with my life.
Right.
And so I sort of went down the business path. But then I realized that many of these people who I was looking up to, who were doing things that I wanted to do and who were managing their tax liability, were using real estate to live tax efficiently. And I wanted that. And so I really got into the real estate space because I had a tax problem. I wanted to protect myself.
So the tax benefits that you received through real estate investing, was it the passive losses? What were some of the things that drew you to the advantages?
Yeah, well, uh, I was a student, still am, but I did a deep dive and just really figured out, sort of mapped out a path for myself, and got a really good CPA, and we started working on this together. And I quickly realized that if I became a real estate professional and really started making real estate, my primary, that I could, use leverage and bonus depreciation and cost segregation studies and kind of accelerate depreciation and really use that those depreciation to use those losses to offset the tax liability on my ordinary income from my active businesses. So that was a game changer. And so it was really about learning and sort of charting a path forward and figuring out where I wanted to go, and then kind of putting a game plan around that.
Yeah, that's so cool. That's an amazing story. So obviously you've been successful in business, you've been successful with several different classes at this point. What types of assets are you investing in real estate these days, and how do you kind of decide when to make that pivot?
Yeah, so I really, the asset classes that I take out to my investor base is really just a reflection of my own portfolio. And each one of those asset classes do different things. They do different things. And one of the things I've actually taught sessions on this about, you know, kind of, figuring out your different income columns. Like, okay, you had a liquidity event in this column. So you got capital gains, you got ordinary income in this column, and you got passive income in this column. And so figuring out, okay, what does that look like on the income side? And then figuring out, okay, well, what assets can I use that give me depreciation to offset those specific buckets of income, and help protect or offset the tax liability on those specific buckets of income. So when I was able to figure out, okay, this asset class over here will take care of my tax liability on my capital gains event, the liquidity event of some kind, or this asset class over here will take care of will shield the tax, will shield me from the tax liability on my ordinary income. And then, so each one of these asset classes has their own sort of unique features to them. And when you figure out how to pair them up with your income column, that's how you get to the point where you can quickly become tax efficient. It's about knowing the game, understanding the game, and then getting strategic. It's no different than playing whatever football or I mean, you just got to know the rules, and then you make adjustments and play by the rules and use the rules to your advantage.
Completely, yeah. It's all about education, and finding the right people to reach out to for questions and getting answers. Passive investors in real estate are able to receive a check every month. Some people call that mailbox money. We say money really does grow on trees. Visit the website at biggerpictureholdings.com, where we have a ton of free resources to help you learn more about planting your very own money tree. So what types of things are you learning at this point in your career, and how are you continuing to hone your expertise?
Well, I'm always learning. So I'm always learning. There's new things coming out. Anytime there's a bill, there's a new pit, and where there's a new bill comes out, there's different twists and techniques and tweaks that I can make in my strategy going forward. So, when we had the CARES Act come out a couple years ago, we helped our investors save millions and millions and millions of dollars in tax just by using pieces of the CARES Act and figuring out how to, we taught whole sessions on this, how to claw back the taxes that they had paid for 5 years prior to that, and then putting depreciable assets together to be able to do that. The latest one that just came out, Inflation Reduction Act. There's stuff in there. I mean, most of it's toxic, and we all know that, but be able to go in there and take what's in there and use it to use it to your advantage. I mean, it's really anytime there's a bill that comes out that's um, hundreds of billions of dollars big, there's opportunity in that bill. You don't need to like it, and most of us don't. But the fact is that the bill is there, and there's opportunity buried in there, and you just got to take advantage of it. So learning that kind of thing and being on top of being on top of not only rules that are changing and opportunities that are coming up, but then also navigating through these different times. Times when interest rates are spiraling. And when interest rates are going up and creating challenges at the same time, they're creating big opportunities.
Yeah, what are some of those opportunities that you see coming up in the next 12 to 18 months?
I believe, well, a couple of things. I think there's going to be buyers and sellers have their expectations, and in the last 12 months and even still today, you got sellers kind of stuck in that driver's seat mentality that they've been in for the last 5 or 8 years. So you got a kind of a disconnect, and that's slowly coming back into equilibrium, but you got kind of this disconnect between the buyer and the seller. um, in the long term, the buyer's going to win. The buyer's going to, that deal has to make sense, and it has to make sense at today's interest rate, in today's investment climate. And so, those are opportunities we're looking at. We're coming across opportunities that are priced better than they were 6, 8, 10, 12 months ago. I think we're going to be seeing more of that in the future, not less. So, just and then being ready, having cash available to you when an opportunity comes across your desk that it could be distressed, and not that it's a bad asset. It's the maybe it's the financing that got put on that deal that made it distressed. So there's lots of opportunities in the marketplace right now, and there's going to be a lot more in the next 12 months.
Yeah, that's one thing that I hear over and over from a lot of different people is just the fact that it's time to make sure that you have a lot of liquidity and have a lot of cash just ready to deploy as those opportunities pop up.
For sure.
So, in your best estimate, what are some of the best ways to find those distressed properties? Obviously, you want to continue to hone, broker relationships, but what other avenues are you using to find those deals right now?
Yeah, so being in the market, knowing the right people, just being in the game, relationships. This is a relationship business. So if you can be in the game and have the right people around you, and people that are connected in the space. I mean, one of the advantages that we have here is we're not we're not a single focused investment firm. We do self storage, we do car washes, we do ATMs, we do natural gas. Um, but a couple of those we're not the operator. We team up with a world class operator, and when you do that, that is their single focus. It's not our single focus; it's their single focus. And when you can tap into their network and their relationships and who they are in the marketplace, I mean, there's power in that. So partnering with the right people who are very well connected in the space gives us a little bit more of kind of a broader range of, just the ability to tap into that space by making a few quick phone calls and tapping into the real authorities in that business.
That's awesome. Yeah, no, I definitely appreciate having you on. I've certainly learned a lot. So I know you also invested in some cryptocurrency as well. I'd love to kind of hear your thoughts on where crypto's at this point.
Well, I believe Bitcoin will be higher in the future than it has been in the past. And so, I take a long term approach. The older I get, the more important it is to me that I don't need to know when it happens. I just need to know that it will happen. And meaning that I don't, my time horizon has extended a bit. Like I don't need to have that return in 12 months. I just need to know that it's going to happen in 36 months or 60 months. Or, and so yeah, I take a longer term approach to some of those things. And I just think that based on what I'm seeing in the market, based on uh, the number of users, based on institutional adoption, based on what I'm seeing the institutional players and the trading desks are being set up by the big five banks and those are all to me bullish signs. So to me, it doesn't really matter if Bitcoin goes to 70,000 next year or 3 years from now. I just believe that there's some upside there. So, and really, it's a protection. I mean, here's the thing. Here's my take on that. When you live in a society with a whatever a 7 or 8% inflation rate, so now you take that over, a 10-year time horizon. When I would much rather um, I would much rather have they take a risk when there could be big upside with a potential for some downside than be 100% in dollars where I know that we're going to have a lot of downside. So that's not like a risk. That's not, I mean, that's pretty much baked in stone. And so, the idea that I could take a risk and maybe get some downside by investing in Bitcoin or cryptocurrency or some of that. I mean, if you're in dollars, I mean, it's pretty much baked in the cake. So you can have it either way you want. You just don't have a ton of upside in being in dollars, and where you could have some potential upside in Bitcoin.
Yeah, I love that mindset. I think, everything about investing, it's really just education and mindset, flipping all these misunderstandings and like these things that like are holding us back. It's just finding the right people, learning the right things and being able to understand the risks involved.
Yeah, no, I agree.
Well, that's awesome. I've got just two more questions for you today, Dave. Question number one is what are some of the lessons that you've learned along this journey, and any advice that you'd have for other people looking to invest?
Um, don't focus on the short term. This is a marathon, not a sprint. Um, put more focus on the team and the quality of the team and the quality of your partners than on the projections on a spreadsheet. Anybody can put anything they want. I used to get all excited when I'd see, oh man, look at this. I'd have like 5 or 6 or 10 different deals, and I'd be looking at them and like, okay, but this one has the best return. This one's going to get me the highest, IRR or cash on cash return, whatever. Today, it's much more about who cares about the pro forma. I want to know about number one, it's got to be an asset class that I believe in, that I'm bullish on, and number two, it's got to be an operations team that can execute the plan that I trust, that I love, that's on top of their game. I love doing business with A players. So focus on the team, surround yourself with great players.
Yeah, I love that. That's great advice. Last question for you today is, what's your proudest accomplishment so far? That could be real estate, that could be family, just in general, or a mixture of multiple.
Um, Probably, so my biggest accomplishments, I would say, is when I see my children become uh, successful human beings that provide value in today's society. So if I can do that well, where they also embrace our faith, where they go out and provide value in our society, and they're not a drain on society. I'll go with that one.
Yeah, I love that. That's awesome. Well, Dave, it's been great learning from you, and really glad to have you on today.
Thanks for having me. I enjoyed it.
Like and subscribe below. A new episode will air every Tuesday at 7 a.m. Are you looking for more content? Visit our website, biggerpictureholdings.com. And remember, money really does grow on trees.